Hello, good afternoon. It's a pleasure to be back with you again today. I know it's been a long day. I'm going to try to energize you here at the end of the day, talking about exponential energy, the disruption of the $6 trillion energy industry, which has a massive implication for Spain in particular. So you know me talking about innovation. I'm a computer scientist. I've also, as I've come into the energy field about a decade ago, I've increasingly become passionate about this field, and so I'm also an investor in early stage clean energy startups that aim to be the next Teslas and solar cities, and I'll try to bring that economic perspective and business perspective to this and talk to you about how that's possible for you in some cases as well. But I'm going to talk about energy today, not just because it's a massive economic issue or a massive business opportunity, but because it's a moral issue. We are in the 21st century, yet more than 1 billion people lack access to modern energy. And those people live more impoverished lives because of it, and they are less able to be creators, creating new innovations that benefit all of us as a result as well. And then on the other side, the way that we produce energy has all of these negative side effects, from air pollution that kills millions every year to the warming of our planet that is continuing unabated. Scientists now say we need to stop at 1.5 degrees Celsius of warming. We've warmed 1 degree Celsius since the beginning of the industrial era already. The good news is the way that we produce and use energy is being disrupted. And let me give you a concrete example of that. This is Peabody Coal. Peabody Coal in 2011 was the largest private sector coal company on planet Earth. Between 2011 and 2017, its stock price, 2015, its stock price dropped 99.8%, and it went bankrupt. And that was a malaise across the entire industry. We had 8 multi-billion-dollar coal bankruptcies, and the total market value of publicly traded coal companies dropped by 90%. And that happened because we hit a turning point. After 150 years since the dawn of the industrial era of constantly growing consumption of coal, that ended in 2013. And the world's appetite for coal peaked in 2013 and has declined ever so slightly. And now it's probably due for a long plateau for several years to come before it starts to really sharply decline all around the world. And that decline is driven by the increasingly good economics of cheap renewable energy, which is now the cheapest electricity on planet Earth. I could not have said that in 2015. This is something that has been long in the making, but this is a point we've only passed in the last 3 years or so. And let me give you some concrete numbers on that. To make a new coal power plant or a natural gas power plant, you will produce energy in most parts of the world at about 6 US cents a kilowatt hour, a little over 5 euro cents a kilowatt hour. And in the early days of clean energy, it was ruinously more expensive. Wind power used to cost 60 cents a kilowatt hour. These are US prices. But you can see that sometime around 2012, 2014, it broke through that level. Now we have wind power in the Great Plains of the US at 4 cents a kilowatt hour, a third cheaper than new coal. And that, of course, it matters where you are. The windier you are, the better the price of wind energy will be and the stability of it. But you see, every continent on Earth has these areas of deep red, of exceptionally high and steady winds. And so in those areas, the price is now incredibly low. In Morocco, 2.8 cents, half the price of new coal or gas. In Brazil, a third the price of new coal or gas. In Mexico, a third the price of new coal or gas. And in 2010, in no country on Earth was wind power cheaper than new coal or gas without subsidies. And now in more than 20 countries around the world it is, and it continues to get cheaper. And here in Spain it's hit that point. You may not be able to see it because these areas are concentrated, but Spain has some of these best on-land wind areas, and so Spain made a major policy change. After being an early pioneer helping to drive the rise of solar and wind with subsidies, Spain put the brakes on. But then in 2017, you made a critical change, which is you brought this back, and you brought it back with more of a market, with an auction model, where project developers bid who could build you new solar or wind at the lowest prices, and predictably, that has brought the prices down. So now in Spain, you have bids for wind power at 4.3 euro cents a kilowatt hour, which is comfortably below the cost of building new coal or gas. You probably can't even build new coal or gas at those prices here in Spain. And the second thing that's happened is as we've built these larger and larger wind turbines with new blade geometries, we've learned to make wind power less intermittent. People complain that wind and solar go up and down. Well, that used to be the case. It's still the case, but less so. We think about how steady is an energy resource and its capacity factor. And in the late 1990s, we built wind turbines with a 10% or 15% capacity factor. Mostly they weren't producing power. And now, in the best sites on land, we're building with more than a 50% capacity factor. And we see a path to 60 or 65% in really good sites on land. But the future of wind power is probably offshore. And I'm one of the great optimists about clean energy, but I would not have said that 2 or 3 years ago. 3 years ago, I thought offshore wind power would never be economic because of the cost of building these devices that had to be built all the way to the seafloor, the cost of maintenance, how much things can go wrong with salt water. But we would love for it to be true, because the fastest winds and steadiest winds on planet Earth aren't on land. They're on the continental shelf, just beyond land. And fortunately, I was wrong in my pessimism, because in 2017, for the first time in the German market, we had offshore wind power bids of zero subsidy. They would build these turbines and put them in the market at wholesale prices, and that's a 4 times price decline over a period of about 9 years. And because offshore wind power is still a very early industry, it's going to see its prices drop more rapidly, and I believe that offshore wind in most parts of the world will be the cheapest wind power and the steadiest. We already have offshore wind farms that produce at a 65% capacity factor, and we'll get to 70 or 75, making them almost baseload power, if you will, solving this issue of intermittency. And you can see those low prices are in the North Sea, which is class 7 winds. Spain has class 6 winds, the second best on Earth, and so this will be a ripe market for this technology as well. So wind power prices will keep dropping, and almost everywhere around the world there will be wind power cheaper than building new fossil fuels. But solar power is more relevant for Spain and is changing in price so quickly as to make wind power look slow and stagnant. Over the last 40 years, the cost of a solar panel per watt of power it produces has dropped by a factor of 250. In fact, it's more than this. If I updated it to the latest numbers, it's almost a factor of 300 since the early 1970s. And driven by that, we've seen what we call crossover, the point at which in the sunny parts of the world with no subsidy whatsoever, wind power or solar power is the cheapest power you can deploy and is also the fastest dropping in cost. Again, you've got to beat this number, 6 cents a kilowatt hour. Well, let's look around the world. And India is the country that coal companies most had hope for. After China slowed down its coal and peaked in coal, people thought, well, India will keep burning more and more coal. They have as many people and 1/5 the amount of energy. But now in India, solar bids are coming in comfortably below the cost of new coal power. The price of solar, 20-year solar contracts in India has dropped by a factor of 4 in just 4 years. In the US now, if we remove all subsidies, we have solar prices at about just over 3 cents in the Southwest, the sunniest parts of the US, and we've seen the price of 20-year solar power contracts in the US drop almost by a factor of 10 over the last decade. In Mexico now, we're at almost down to 2 cents, 2.5 cents, probably lower than that, with auction models being used there. In Abu Dhabi, one of my favorite photos of all time, in one of the oil capitals of the world, solar being built at 2.4 cents. I was with the Ministry of Energy there, with the minister last year, and their internal math said every watt of solar they deployed saved them money because it was so much cheaper than any other option that they had. But the world champion now is Chile. at 2.1 cents. Still a little bit more expensive than the cheapest wind on Earth, but it's dropping in price faster. And so we'll see it get cheaper and cheaper. And so again, around the world, before 2015, there was basically no country on planet Earth where solar was competitive without subsidies, and now there's more than a dozen. In fact, in any of the sunny parts of the world, solar is now cheaper than new coal or gas without subsidies. And driven by that, solar has exploded, a 50 times increase over the last decade. Now, it's still quite small. It's only 2% of global electricity, but it's been doubling in pace every 2 years. And that doubling itself, that pace of growth, drives the cost down. Because what we know about technology is almost all technology has something like Moore's law. It has something called Wright's law, which is that every doubling of scale will bring the price down by a certain percent. And in solar, every doubling will bring the price down by about 25%. So that means it goes through this cycle that basically all technologies have, which is when they're new, they're very expensive, whether it's gene sequencing, 3D printing, AI, or solar. So you have to find a first customer, which was really Europe, with subsidies that drove initial demand, and that demand led to the larger scale, which led to the price falling, and at a lower price it could fit into more markets. And now this is effectively unstoppable. There are enough places on Earth where solar with no subsidies, with no change to policy, is the cheapest option, that it will keep scaling and keep spinning through this cycle. And in fact, it's done so enough times now that in the country that really kicked off the solar revolution, Germany, which is one of the least sunny places on Earth, really, now suddenly solar is competitive without subsidies even there. Last year, we had a bid in Germany of 4.3 euro cents for new solar. The price of solar bids in Germany dropped by a factor of half in 2.5 years. And now here in Spain, again in 2017, you went to this auction model, and so in 2017 you had bids in Spain for solar at the same price. Now, it could have been cheaper. The only reason it wasn't cheaper is this was, by law, the lowest anyone was allowed to bid in the auction. So without that constraint, it would have been even cheaper than this. And I can show you exactly why, because the least sunny part of Spain is sunnier than the sunniest part of Germany. So where does this head if we take this reduction in cost of 25% per doubling, and we look at what will happen of the cost of solar in Spain? In 4 more doublings, from 2% of world electricity to 32%, the price should drop to less than 2 US cents, to less than 1.5 euro cents per unit of electricity, per kilowatt hour, 1/4 of the price of electricity from coal. When will this happen? It's easier to predict price as a function of scale, but even if the doubling rate slows down, even if it starts to double every 3 years, and every 4 years, every 5 years, goes from 40% annual growth to 20%, that will still happen over the next 15 to 17 years. And that is an incredible disruption and an incredible opportunity, as I'll come back to. And in fact, globally, there's an even bigger upside, because I told you more than 1 billion people don't have modern energy. Where do they live? Africa, India, a bit of Southeast Asia, some of the sunniest parts of the world. So those people will have the cheapest energy on Earth. And in places like the Middle East, North Africa, South Africa, parts of Australia, Chile, parts of Mexico, we could see 1 cent solar in the next 15 to 20 years. So the price of solar will keep plunging, and it will be the cheapest energy on planet Earth, though wind will also be quite competitive. Now, of course, wind and sun both do have this problem. Even with 65, 75% capacity factor wind, we will have nighttime when there's no sun, and we will have periods when there's no wind. So people immediately think, well, let's go to storage, but there's something that even more cost-effective than storage, which is putting them together. Because what you see is solar and wind are counter-cyclical. This is North America, but Europe is quite similar. In the summer, you have the most sun, and wind cyclically is low in the summer. And of course, you have no sun at night, but wind blows more at night cyclically. And in the winter, you have the most wind. And so what that means is that the thing for Europe to do is not to have a set of 28 nations that are each trying to meet their individual energy demands, but to be an energy continent where over the course of the year you bring wind in from the windiest places, mostly the north, so some in Spain, and then in the summer you bring solar in from the sunniest places, and Spain has the biggest arrow because it's the sunniest part of Europe, and even in winter Spain can provide some sun. So that looks perhaps preposterous. Can you really transmit power over thousands of kilometers? Well, let me show you what's happening in China. Because in China, we have this challenge, which is all the people and electricity demand, or most electricity demand, is here on the East Coast. And this is how much sunlight China gets. And the East Coast is not the sunny part of China, and it's not the windy part of China. Both the sun and the wind are deep inland in the west of China. So what China is doing right now is building the world's largest high-voltage DC grid that can transmit power from west to east, and the longest of these lines being finished right now transports clean energy 3,400 kilometers from the Gobi Desert to the outskirts of Shanghai. And it transmits 90% of that power. It loses only 10%, and it adds about a euro cent, maybe a euro cent and a half to the cost. And that is a huge opportunity, because with a line like that, you could transmit power from Sevilla to Copenhagen. And you could be transmitting power to Germany or Poland after the sun has set there, shifting it by an hour, hour and a half. And that itself is a huge opportunity. So there's massive opportunity here. That said, energy storage is extremely exciting, and it's actually the most exciting area in clean energy technology right now, and one of the areas that I like to invest in. You all know who this guy is, right? Tony Stark? Yeah. Not the closest thing we've got. I put this here because the reason you see so much happening in energy storage is not because Elon invented the arc reactor. It's because lithium-ion batteries are also an exponential technology. Carlo talked about this a bit. The price since just 2010 of lithium-ion batteries has dropped by 85%. And my forecast is it'll keep dropping by quite a lot. I'll tell you how much in a bit. But let's just bear in mind that the forecasters have completely missed this exponential change. That you have, in 2013, the US Department of Energy said battery prices would fall by a third by the next 35 years. And here's what actually happened. All right. So bet on the innovators and not on the forecasters. And batteries are actually, they're still quite expensive, but they're cheap enough that things like this happen. In Arizona, a utility owned by Warren Buffett put out a solicitation for electricity from 4 p.m. to 8 p.m., and it was not won by natural gas, which has always won this in the past, but by First Solar, with batteries attached to their solar plant. And batteries will keep dropping in price. Carlo showed you one forecast. I think even that forecast is conservative. I think we'll see batteries that drop in price at more or less the same pace as solar, drop by a factor of 5 in cost by 2030. That's about the pace that they're on. And storage will keep getting cheaper, and there's new technologies besides lithium-ion batteries as well that are coming. But I want to come back to this notion that the change is deceptive, that the forecasters miss this rapid pace of change. You saw a slide like this, an image like this from Jeffrey on the first day. When a technology is new, it's very expensive and it doesn't perform very well, and we're disappointed, and we say it will never get good enough, never get as good as our current technology. And then it surprises most people, right? Well, that's what happens to the experts in energy. Here's the world's energy experts, the IEA, the International Energy Agency. The IEA, alas, is not what I would call an exponential organization, right? And I'll show you. Here's the IEA's forecasts for the annual installation of solar over time. In black is what actually happened, and the colored lines going off to the right are what the IEA forecast would happen for the future at every given year. You see, every year they make a forecast that says solar growth is done. We'll keep installing annually the same amount as this year. Actually, they're usually wrong about the current year even. It's like some analyst is taking their Excel spreadsheet and taking the formula and going copy, paste to the next year, right? More or less. That's not a methodology. Well, it is a methodology. It's one you should go back and check against reality. Past performance might be a predictor of future success in this case. Here's a chart I like better. This is not a forecast, this is a hindcast. AllianceBernstein are private equity in New York City, not environmentalists. They put this chart together. Across the bottom is the cost of coal, gas, and oil. And that gray line, what's that? I think it's someone's child took a crayon and scrawled on their parents' report. Now that's the cost of solar, and the cost of wind, and the cost of batteries. That's disruption. And now we see the disruption having impact. China, over the past 2 years, has canceled more than 200 coal plants they had planned. At least 40 of them had broken ground and started construction. Billions just written off that will never be used productively. India, over the last 10 years, has canceled about 500 coal plants that were once on drawing boards. In 1 month, they canceled 14 gigawatts, about $9 billion worth of coal plants. And the answer given was, the cost of solar is in free fall in India. Why would we build coal now? So that's disruption of building new coal plants versus building new solar. We're not quite done building new coal, but we're getting very close. But what about the 1,000+ coal plants that are already built around the world? Well, those face disruption too, because something remarkable happened a little while ago. The CEO of NextEra said this. He said by the early 2020s, it would be cheaper for them to build renewables than to operate their existing coal plants. All right, that's a massive change. Carbon Tracker did the math. Here's the operating cost of coal in the US, and here's the cost of new solar. And they have similar charts for Europe, mostly with wind in the north, for India, and for China. And in fact, that CEO of NextEra saying early 2020s, he was wrong, because it happened in part of the US in 2018. This utility in northern Indiana, NIPSCO, is 65% coal-powered. It's not a great solar location, it's an okay wind location, and it's a deep red state, voted for President Trump by 19 points. But late last year, you can see October, the utility announced that the cheapest thing for them to do was to go from 65% coal to 15% in 2023, and then get rid of it entirely by 2028. And replace it all with solar, wind, and batteries, and smart demand. That looks like a Kodak moment. All of that, though, is just electricity. So I want to talk about the other way that we use energy, the other biggest way, which is transportation, for which we use oil. And I believe oil will be disrupted as well. And it'll be disrupted because the same thing that happened to coal will happen to oil, that the global demand for oil will peak. And this $2 trillion industry will go down. And I'm not the first to see it. This guy is, Sheikh Ahmed Yamani. He was the Saudi oil minister during the OPEC crisis of the 70s. And this is what he said in 2000. The Stone Age didn't end for a lack of stone. He was warning his fellow sheikhs that the oil age would end not because we ran out of oil, but because we invented better technology for transportation. And it's happening. And it's really 3 technologies. The first is electrification. You expected me to say that, right? And you heard Carlo talk about it a bit. We've seen a sea change from the EVs of 15 years ago that were not something you'd feel safe in, you weren't sure it could get you to work and back, you couldn't take it on the Autobahn, that's for sure, to now the best cars in the world are really electric, and they're getting in price down to something that's near mass adoption. And every auto company on Earth, following Tesla's lead, is now going full bore into electric. VW, for a variety of reasons, is spending $50 billion on electric. General Motors says their future is all electric. That's the change that's happening. And so electric vehicles have grown exponentially. They're growing at 50% faster than solar was growing at this era. They're still small. They're still just 0.5% of all vehicles on the road. But now, this year, they were about 3% almost of new vehicles sold. In China, the largest auto market on Earth, they were 7%. of all vehicles sold. And again, all the forecasters have missed and missed. This is a series of updates to forecasts by major forecasters over 3 years. Every year, they lift their forecast for EVs, and I'll bet you this year they'll do it again, and next year they'll do it again. So EVs are growing, and they're growing so fast that we may have hit another peak demand, and it's peak demand for combustion engine cars, for new sales of combustion engine cars. And a few months ago, I said this. I said the peak of annual sales of combustion cars would be in 2023. And as is the case with anyone making forecasts, sometimes I'm wrong. I've been wrong a lot, almost always by being too conservative, because it looks like this might have actually happened in 2017. Because here's what's happened with auto sales, that the pink line is combustion engine, and you see the green of EVs eating into it. And some of this is cyclical. The auto market is down a bit because of cyclical issues, so it may rise again. Maybe the real peak is 2021, but by 2021, we could be selling 7 million electric cars a year. So this may really be the peak, and that sends shockwaves throughout an entire industry. But the second technology you might not realize, but it's vitally important, is this transport as a service will push electrification. Uber and Lyft didn't just disrupt the taxi industry, they grew entirely new industries. Uber and Lyft do 3 times as many rides in 2018 as the entire taxi industry did at its peak in 2012, right? Because if it's a easy, convenient experience, and if it's cheap, you will use it for things you would never have used a taxi for. And in fact, Uber and Lyft are about half the cost per mile of a taxi in most parts of the world. It's one of their advantages. But why will they go electric? Because electric is cheaper. Electric vehicles cost more up front, but there's less energy use and less maintenance for the reasons that Carlos showed you of complexity. How much cheaper? Here's a study in 2015 looking at an EV in London. Here's a combustion engine vehicle. The vehicle is relatively cheap, but the fuel is expensive and the maintenance is expensive. The electric vehicle costs more up front, but the energy costs almost nothing, in part because it's 90% efficient instead of 10 or 15% efficient, which is what the car is. So that economic pressure will push fleet operators, taxi systems, to go electric. But it's going to be much, much bigger in a cost comparison than that in a few years, because the most expensive part of the electric vehicle is what? Battery. As we sell more EVs, we sell more batteries. What happens to battery prices? They go down. As they go down, the whole vehicle cost goes down. What happens to electric vehicle sales? Goes up. It's that same virtuous cycle. And so how cheap could they be? And for this reason that Carlos showed you of the incredible simplicity of these vehicles, when batteries are cheap, they will be much cheaper up front. How much cheaper? Here's what Ford says. Ford says when they're looking at factories for electric vehicles, the factory size is 1/2 as much for the same production of vehicles. The factory capital cost is 1/2 as much for the same number of vehicles produced if it's electric. The labor cost is 1/3 less. So add that up with cheaper batteries, and you get not a 20% cost advantage, but about a 50% cost advantage. Electric vehicles at 1/2 the cost per kilometer traveled than combustion engine vehicles. And that, in turn, will lower this price, which will both make fleet transport take up electric and will encourage a more rapid shift to fleet transport when it's half the price that it is today. But the last technology is autonomous vehicles. And I'm a bit more optimistic about Carlo. I agree with some of the challenges now, but there is a lot happening. In December, Waymo launched a commercial service in beta in Phoenix, Arizona, and a few hundred people are in this beta. They're customers, and they have an app where they can call a Waymo driverless vehicle, and it comes and picks them up. They've been working towards this for many years, and the vehicles are still not perfect. They get confused in the chaotic scenarios that Carlos showed you. General Motors, meanwhile, bought this startup, Cruise, for $1 billion, and they say they'll have a commercial driverless taxi service operational by the end of this year, and they've gotten regulatory approval in the US for a vehicle with no steering wheel and no pedals for this year. right? And then the wild card is Tesla. I talked to you about them the other day. They have a different technology direction, but they have the most data, billions of miles traveled. Now, I think we're just a few years away from this really being a compelling environment, or a compelling consumer product, and I can quantify why. Because we have a metric of how good electric vehicles are, which is how many miles can they go between human interventions. And that has gone up and up and up. This data is super fresh. The 2018 data, just a few days old. You're one of the first audiences to see it. In 2015, Waymo drove 1,500 miles between human interventions. Still amazing, but you would see it quite often. Now they're driving 11,000 miles on average between human intervention. 6 times improvement, 6 times reduction in their error rate over those 3 years. And if that trend continues, they'll be going 50,000 miles between human interventions by the end of 2021. And that's the point at which it appears that will be a super compelling product. Maybe not in Mumbai, maybe even not in Amsterdam, but in a whole lot of cities where the streets are relatively orderly, that will be a compelling product. Now, why does that matter? Because if you get into an Uber or a Lyft, half the price is the cost of the driver. Take that away, and you're at 75 cents a mile. But I told you battery drops the cost by half as well, and you're down to 35 cents a mile, 20 cents a kilometer, which is a little bit more than what a bus costs for a 4-seater vehicle. And it's half the price of owning your own vehicle in the US, probably a third the price of owning your own vehicle. And it can go cheaper than that. Because these big 4-seater vehicles, we don't need the congestion from them, of course, and the average number of passengers in a taxi or an Uber is about 1.1. So why are you calling a 4-seater vehicle for you and your briefcase? So why not call a small electric autonomous vehicle? This vehicle is not autonomous yet, but for less than $9,000 US, a 200-kilometer range electric. So I think we'll see economic pressure for these that will cut the cost. This is 1/4 the cost of a Tesla Model 3, right? Or the other way, if you're willing to share a vehicle with a dozen people and willing to walk a block or two, in the US, if you call a Uber Express line, it's 1/3 the price of an Uber, because they amortize the price, right? And so now we're talking about maybe 10 to 15 cents a mile, 6 to 10 euro cents a kilometer. That's half the price of taking a bus today. And if that happens, people will still have an internal combustion car. You'll have it to put the car seats for the kids in, to go skiing, to drive to another country, things that you do a few times a year, maybe once a month. But your daily kilometers will shift to this. Right? And we'll all be deceived, because while vehicle ownership of electric, the blue line will go up pretty fast, the percent of miles or kilometers driven could go up much, 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 much faster. And that's what we need for rapid decarbonization as well. And beyond that, light trucks are already being electrified, and it looks like next year will be the year of the electric semi, and they are likely to be cheaper on a per kilometer ton basis than internal combustion, and that will drive rapid switchover. And with that, about half of the world's oil consumption is under severe or moderate risk of disruption. Not airplanes, not petrochemicals, not ships, but everything involving transport, and lubricants are really used mostly in cars, and electric cars don't use them. So that could mean the peaking of global oil demand quite soon. How soon? Well, I'll show you my estimate, but first, what do the oil majors say? Total by 2030. Equinor, sometime in the 2020s. Shell, basically sometime in the 2020s. Right? Now, the IEA, you know what I think of them. They say oil demand will keep on going up forever. Bloomberg New Energy Finance says it could be 2020. I think that's too soon. I think this is a deceptive disruptive. It'll start small, and these models will scale from city to city, but the long-term disruption could be much larger. So I'm going to end with thoughts on how you can take action in an area that's being so rapidly disrupted. And we know that crisis is both danger and opportunity. And despite everything I've said about the pace of technology, we are still in incredible danger from climate change. Every year we delay decarbonizing means that the ultimate decarbonization, the eventual decarbonization, has to be even faster and even steeper to stay under 1.5 degrees. And Citi, those hippies at Citi, anybody here from Citi? They say that if we stay just under 2 degrees Celsius, we will have to leave so much oil, gas, and coal in the ground, have to write down so many coal and gas plants that the economic destruction, the value of stranded assets, will be $100 trillion. I've never seen a number so big, and that has severe economic consequences. But of course, in destruction, there's also the opportunity for creation. So here's a handful of tips for you. This one's very technical, of course. Keep calm, but do cover your ass, by which I mean if you have exposure to things like oil or auto parts, those are very, very dangerous assets right now. And think about how you hedge against them. Number 2, reduce your costs. On your facility in many parts of the world, you can deploy solar and offset at least some of your energy consumption and lower your overall bill, and that's a competitive advantage. 3, Spain has done amazing work in opening the market. Orange areas here are auctions around the world, and you see that when auctions happen, the prices fall. Continue that process and remove things like those price floors. And 4, energize your economy. Spain is the sunniest part of Europe. And that means in the long run, and pretty good wind too, that means in the long run, Spain could have the cheapest electricity in Europe. And that would be a competitive advantage in attracting industry that needs cheap energy. And that would bring investment and create jobs right here in Spain if you rapidly accelerate this. And the other opportunity is that export. If Spain produced half of Europe's solar energy, which is not unreasonable given your amount of sunlight, cost advantage, and being in the West, so you can keep producing it after night has fallen, that's 500 billion euros of potential investment and something on the order of 200,000 jobs in Spain deploying that solar. And finally, invest in the future. There's lots of ways to do so, and if you're curious, you can ask me about how I invest or how you can join in. But I will just close with this. We have done what Jeff started this with, of going from massive resources to compute to far smaller resources. And that seems like magic. But the reason we're able to do that is that our technology isn't really made of matter. The phone that you have that's a supercomputer isn't made of glass and steel or plastic. It's actually made of knowledge. It's made of accumulated scientific discoveries, engineering discoveries, software discoveries, and knowledge has a very different economics than matter. Because I could break my phone, but we'd still know how to make one. An idea can't chip. I could give you my phone and I wouldn't have one, but if I've given you an idea, we all have it, and if you give me one in exchange, they meet, they collide, and they give birth to new ideas. And the right idea can replace scarce resources, multiply the value of resources, reduce our impact on the planet, and ideas are the one natural resource we always have more of over time and not less. Thank you very much.